Good morning, everyone. Thank you very much for joining us on this morning's episode of True Potential's Morning Markets. In today's video, we would like to look at the performance of the manufacturing and services sector in the UK and Europe and assess its impact on economic growth. Financial markets within the US were closed yesterday due to the Thanksgiving national holiday, so we're going to focus our attention in on the UK and Europe. Yesterday, we saw the release of the PMI data, or Purchasing Manager Indices information, for both Europe and the UK. Now, this information is split into two components, one being the manufacturing side and the other being the services side. Now, this information is useful for investors and market participants as it allows them to get an assessment of the relative strength of each side of the economy. The way the indices are prepared is any reading below 50 indicates contraction, whereas any number above 50 indicates expansion. So if we start with Europe first, we saw that both the manufacturing and services side of the economy posted scores below 50, which would indicate contraction. However, the improvement has been that rate of contraction has slowed. If we look at the two sides and compare services relative to manufacturing, manufacturing was weaker than the services side, and we know the reasons for that. China is a key export market for Europe, and as we've covered previously, China's growth is struggling amid the reforms that we've seen within the property sector. If we turn our attention over to the UK, however, we saw similar readings within manufacturing, where that side of the economy is posting scores below 50. However, when we looked at the services side of the economy, we actually saw that score above 50, and that was a surprise to financial markets. So seeing that side of the economy expand. Now, that was a surprise to financial markets, and the way that played through into markets was for gilt yields to rise, as market participants expected more hawkish rhetoric to come from the Bank of England and likely to keep interest rates higher for longer. Thank you for watching today's video, and we'll catch you on Monday.